Hello again, people. Right, well, as you know, I'd shorted pound CAD if you've watched my previous videos, and I went long on cable all before 8:30 in the morning. It's now 9:24, and before I take the dog for a walk, I am going to analyse this pound yen and see what we could have done. Looking on the 15-minute charts and thereabouts, missed some fantastic moves on this. So let's just see if my horizontal lines would have created any gaps. We don't really need to do the monthly, but we do need to do the weekly, because we can clearly see, well, if we look at the monthly, you can clearly see there is nothing that affects the price. No low that we might be trading into, no high that we might be trading into. That's what my method is. It is just about trading the gaps between the extremes, highs and lows of candles. Sometimes the flip point that I mentioned in the previous video, because it was the only thing between price and resistance, as it were, or levels. So when you get areas of price in that, like in that previous video, where you can't find out why the price did what it did, why it stopped at a level, then you will most likely find it as an area of congestion. Right, so what can this chart tell us? Well, we have reversed on the monthly chart. Just check that high is higher than lower than the next high. High 499, high 14185, 14. I didn't check the 100 level, I should have. Come on, catch up, mousey mouse. Yeah, 141499, 14185. So that's definitely the beats that high, so that becomes the critical low. Low, high, higher, low, higher, high, broken by the high, low. Continue singing the song until you get a break and close. So this has reversed to the downside on the monthly. It did last month, so this trade was actually screamed at us to go short. So that would have been a valid short trade based on the monthly. Using the lower time frames to enter the trade, there was a potential somewhere in the region of 1,500 pips available last month. Pretty sad for the pound, but there you go. And when you're trading short, you always use old levels of support as your target, and ultimately this one, and then go over to the left to find any more future targets. So this could easily crash right down to this level here. And what else? Well, there's what I was just talking about, an area of congestion. It closes, opens, there's wicks there. You could draw a flip zone or PPZ price pivot zone there, and you will see that the price has respected that as well. I'll stick that on just to show you. I've got a little script for that as well, so I suggest if you get a chance, you get a script drawn yourself. If we flip to the weekly quickly, you'll see how that has affected price. Now this is, I don't know what this chart looked like on the weekly regarding that pivot zone, but you can clearly see, look how price respects it. Hits it, bounces, crashes down, probably tested it before it went down. Then it becomes a new price pivot zone here, and that's probably because it's near a round number of some sort, and you can clearly see 132, the big round number, would have been what caused this price to play around here. So go back to the monthly, delete that, and then where price is now, as I say, the monthly has nothing that will affect price. You could stick one on there if you like. If this price pushes up, it's got to get through that old support, acts as new resistance, which, as you can see there, it looks like it's tested that as well. Once that broke down, came back to test it almost to the pip. You know, this is what I teach, guys. There's no other word for it, because I haven't seen anyone else teaching it. This is my method, my unique method I talk about, and it works. So when that broke through, I wouldn't want to hit that I would go on the lower time frames and look for the reverse and test, and then look for the continuation using every time frame in this way right down to the 1 minute chart. Okay, that's how it works. This indicator is priceless. This indicator is my proprietary one. If you're new to this, sorry if I keep repeating myself. If you're not, we can lose that really. That's how much I think I love this indicator. It's brilliant. Set on 8, and someone asked me recently, well, not someone, Ben, you asked me recently why I chose the 8. I hope my explanation was useful. When I get a new indicator, I test it against price action primarily, and any existing indicator that I'm absolutely in love with. Well, I've had this one for 15 years down here, so there was nothing else to test it against. If I come across another indicator that shows interest, then I'd load it up and test it against these two and price action. You know, if this is telling me long when I've just had a reversal to the short side, this is what I trust best. I dump the indicator in a blink of an eye. I hope that makes sense. So, yeah, that monthly low will potentially act as resistance if the price ever got up to this level. So that's worthwhile having on the charts. And you know, I wasn't going to do the monthly, but I'm explaining why, not about a trade. So once again, this is support because it's forced the price up with a you can see the wick there. So that will also present itself as possible resistance if the price continues up, and remember, a target, because you know, if we, you know, when you're wedded to a method like I am, then I know there is a high instance that will get tested, and I can trade to it using the 1 minute chart or whatever. I'm a scalper. Excuse me. We could put this in just to watch how price reacted against it when we go down to the lower time frames, because when this spike busted through, something's forced it up. We talked about the flip zone on there, but I won't busy the charts with that. And that's about all we can do on the monthly. You could put the current month's levels high and low because they have got wicks, and I hope the reason for that becomes apparent, or is apparent. Something has forced the price up down here, and something has forced the price back down here, probably a daily level or something like that. So at this point I won't bother messing the charts up with more levels. So weekly, now this becomes interesting. Weekly highs we need to put in. Last week's high, which was a day ago, is there, and you can see we could have traded to that, and using the powerful reversal method that I suggest, and the incredible, even though I do say so myself and I don't take any credit for this, some person has put this indicator together and I love it. Not so sure about how it reacts on the higher time frames yet, because it's only been on my charts 2 or 3 months, but I'm learning stuff about this indicator every time I make a new video and every time I study the charts. So you know, it's a work in progress. There's going to be loads and loads of stuff that this indicator will give us. Possible changing settings on the higher time frames because it's slower, of course. But when you're on the lower time frames, you want something that is very reactionary, in my opinion. So we have to put the high on this candle, and we have to put the low on the left hand side, because when price busts through this high, what have we got for it to test? This. So we'll do that while I think about it. This thing is drag and drop on the candle, and then it will attach itself to the lows and highs. I did it myself, this instrument, or indicator, script should I say, so I'm not prepared to share it and have it all over the web. Get one made for yourself. I don't think you'll find one like it for free, which indicates to me that not many people trade this method or understand the importance of highs and lows of candles, and as such can trade them profitably. So that resistance that's forced the price down would likely have affected the price over here, and you can see that candle it has there. You know, you do this more and more and it becomes almost like a self-fulfilling prophecy. You know, that's how I learnt this, and I've said this before, but I'll say it again in case you've not watched any of my other videos. All this came from studying 2Bs and 1, 2, 3 reversals that Vic Sperandio put out there, because once you started using his levels, candle levels, you could see how price reacted to them, and it was just eye-opening. So that low there, obviously when price, if it breaks down again, it's got to be broken through. So what you're doing is building a trade plan here, guys, and you can stay on charts for the day, and then I suggest you clear it all down and do another one for tomorrow, because what that does is sharpen your mind. It does mine, gets you ready for the day's trading. No need to rush, no need for fear of missing out, FOMO. We'll stick one on this level here and this level here, because those are areas to be considered if the price keeps going up today. And it's just good practice in my opinion. Now why hasn't, yeah it has, computer's running a bit slow today. So I think I've covered every level that may affect price. We've done everything on the left hand side that would affect price. If it goes down, of course, that flip zone will affect price, but that will be no doubt H4 levels or daily levels in there. So we can go down to the daily, and there you are, you've got a string of daily candles, lows below the price here. If I was considering going short, that daily support there would have affected price, so let's stick that one in. Most recent support and resistance is what I consider to be the most important, so I'm not really going to bother going over the left hand side until we break out of this sort of area and have a gap and think you've got to check what's on the left hand side to be aware that something may be in your way. So don't just assume that huge gap there will go to that high there. You know, we might as well put a level on there on this chart now. Be thorough. We need one on that green candle there, because that's ahead of us if we break out as well. That one. Oops, don't look like it dragged on the chart there. There. And that looks to be sensible. Remember, the flip zone may affect price there as well, and that low may affect price if we've not got a low on it. Let's put one on it just in case. Already covered by the weekly, no doubt. So then we have to have one eye. This is a daily chart, so this is the important chart from the point of view of where price is going to go today. One eye on the indicator. That's the sort of breakout. That's the pullback, and now we've actually, this is very important. If this closes on this daily chart higher than that, then it's very likely, it's highly likely in my opinion, that this will continue up. Much the same as we've got here. Pullback and higher breakout above the 22, although I'm not sure of the relevance of that on the higher time frames. Need to do more homework. And then what does the price do? 2 green candles, loads and loads of pips to be made over there. Okay, I'm going to close this now, call this part 1, have another coffee, and come back and create part 2.